and PFC has had a good run. I think we can go across to Adrian again. Hi Adrian, apologies. There was a bit of a mix-up with the audio lines, but you were talking about this big recovery in markets.
Yeah, I think the recovery in market has been healthy for sentiment, but I don't think it's the end of negative news flow at all. Not in India, and certainly not in the region, and definitely not in the first world. I think it's nice that we have a slight upward momentum to find a base for the levels of down trading that we have had over the last 3-4 quarters. But I don't think this is the end of volatility yet. We might have seen the bottom, but it doesn't mean it's going to be up from here going forward all the time.
The thing that's gotten the market excited, though, Adrian, is that there's a sense that the money is coming back, particularly to markets like ours. They want to chase a little bit of price performance, which they can see on the screens, and hence a lot of money on the sidelines is being put to work. Is that something you're seeing and sensing around you?
Well, you know, we don't really represent liquidity flows in a very complete way. We focus on old-fashioned investing and not so much on liquidity trades or trend movements. We are not seeing that among our client base. I think our client base continues to be quite steady. They did not contract or redeem a lot of money during the volatility, and even now they have not added significant positions into the markets just yet. Whether that's India or whether that's the region, we have not seen chunky inflows just yet. So I think what you're getting short-term liquidity that's rushing in. They are chasing performance or the green numbers, as you so rightly put through. But it's very difficult to tell whether this is the beginning of a more wide-based rush, or is just something that the short-term traders are currently looking at.
I know you're not a near-term trader, Adrian, but surely you must have some sense of how this is shaping up. I mean, there are two sides to the debate. One class of investors who believe that this is no more than a bear market rally, albeit a powerful one, and eventually the market will correct once again, and it is still going to be a bumpy ride going ahead. The other which believes that there is so much skepticism about this rally and its sustainability that the market might continue to surprise by moving a whole lot higher, even as people stay on the sidelines in disbelief. Which one do you lean more towards?
Well, I think I would think that my personal view is that this is not sustainable, and we will see a correction. We might not see a sharp correction. We might see the markets go sideways for a while, but we will definitely see we will definitely not be seeing these types of market gains on a daily basis for the next quarter or so.
What's your view on India? I mean, we are a slightly unique situation because while we are participating with the global rally, in a few weeks' time we'll have our own election results to contend with, which generally has been a fairly interesting pivot point for our markets. How are you positioned going into that election result? What do you think about it?
Well, our positioning has been pretty consistent. We're still looking at businesses that pull out good cash from their business models, businesses that have relatively insulated financial risk, and that will weather the volatility in the business markets. We think that the operating environment will remain quite difficult in most sectors, and we think that it's only with good management teams and good balance sheets that you're going to ride this through. Our view from a regional perspective is that India is still the place where you want quite a bit of exposure in. If you look at our regional weights, you would find that we hold more Indian stock than the benchmark weight suggests, so we are clearly overweight within the Indian market. But I think that you do have to be very selective about what you hold. I think the current rally is indifferent to the Indian elections, and is very much a liquidity-driven one that's global and not paying too much attention to local dynamics or local politics. I think that will continue for a while.
A 3-month-long drama came to a close a couple of days back. Adrian, at Aberdeen, you used to hold Satyam. I don't know if you hold any of it anymore, but what did you make of the final conclusion and who it's gone to? Any thoughts on that combination?
Actually, we sold out of Satyam after the fraud letter came out. We take a very considered approach, and when you have fraud of that scale, when you can no longer trust the financials or what management represent, we do exit those kind of situations very quickly. So we don't hold any more Satyam stock. But I think it's apart from that, I think it's a relatively speedy resolution or closure of one chapter. It's nice that the people that do work in Satyam, that do good work in the software businesses, now have a clearer idea of where they should go from here. I think Tech Mahindra has something to bring to the table, and I think Satyam does contribute, is an attractive proposition for a company like Tech Mahindra. So I think that's a relationship that will grow and will develop. It will be a challenging relationship. There are going to be some difficulties, but I think for the good men and women that work in Satyam, it's refreshing to see something like this resolved relatively quickly in a transparent way. I think the board has done a good job here.
You would have heard from Infosys as well yesterday. What's your and you do own slices of technology in India. What's your sense of how Indian IT is geared to go through or wade through this fairly difficult environment?
I think Indian IT is very well positioned for the next 3 to 4 years. But I think you do need to be very careful about what you hold. You are right, we do hold quite a bit of Infosys. We do hold quite a bit of Tata Consultancy as well. And I think the quarterly numbers for March were actually pretty good by Infosys, but the market was very focused on their guidance levels, and that was what was the cause of relative caution, and the share price fell in response to that. I think that you will see that if you have a short-term time frame, stocks like Infosys will be difficult to call for a 3-month time period, for 6-month time period. But I think if you look out 5 years, you would find that this would probably be a good time to buy software stocks, Indian software stocks, in companies that you trust and hold them for the future.
Good talking to you, Adrian. Good seeing you after a long time. Thanks very much for your time today. That's Adrian Lim of Aberdeen Asset Management. They're very large investors into the Indian market. Staying with India, but they're saying don't expect this kind of returns that you've seen from the beginning of March to continue through the next quarter, because things might just plateau out after a while. So he's not of the view that we are out of the woods yet, but that's his view. 34.33 Nifty.